Hey there, everybody. I'm Michael McGlone, Vice President of Trilogy Wealth Management, here with the latest rundown on the markets and what happened last week in this Minute with Mike. So, last week's data release saw the third quarter GDP numbers, which showed that the economy grew by 2.8% from July to September. Sure, we grew, but that is a softer number than the expected 3%. Markets actually liked seeing the lower number because a slowing economy makes it much more likely that we'll see another cut from the Fed in interest rates. We also got new employment data last week, which was a very mixed bag and told a conflicting story about the current job markets. We also saw the latest personal consumption expenditure report, which came in at 2.1%, very close to the Fed's inflation target of 2%. But if you look a little deeper into those numbers, core expenditures are at 2.7%. That number is where you take out energy and food, which both experience price volatility. So, what that means to us is that inflation is not slowing quite as much as it may appear. Finally, the tech giants Meta and Microsoft delivered weaker than expected earnings last week. All of this combined to push the markets backward and end October on a down note. The good news is that things rebounded slightly on Friday to start November off right. So, if you have questions about how all of this affects your investments or your financial plan, give us a call here at Trilogy. We would love to sit down and talk through your questions and your concerns. Well, that's it for today. I'll be back again next week to talk about the markets and how they reacted to things this week. We look forward to seeing you again on another Minute with Mike.